Citigroup says the $55 a barrel oil price set in Malaysia's revised budget is realistic. Citi's chief investment strategist for Asia Pacific, Haren Shah, says oil prices are expected to fall further in the short run, but will eventually stabilize between $45 and $60 per barrel.
Can we see oil prices go lower in the short run? Yes. Okay, there is no reason for it not to. I mean, it's all about market forces. But when you take a budget example, when you set a price, you're not talking about a small period. You're talking about the average price over a period of time. I think we do expect prices to stabilize, within a range. It could be anywhere from $45 to $60. So making a target of 55 is not unrealistic for a longer period of time.
Shah pointed out that oil price dropped to a historical low of $33 per barrel when demand for the commodity fell sharply during the 2010 global financial crisis. However, in today's scenario, the price slump is caused by oversupply. Looking at growth figures in the emerging markets, Shah expects demand for oil to catch up with the supply level in the long run. Besides that, he said oil exporting nations have felt the immediate pinch of the sharp fall, which is reflected in their revenue and currency. On the contrary, the benefits of cheaper oil for other sectors will only be visible if prices remain stable over a period of time.
The benefits of lower oil prices on emerging markets, I'm looking at it more from a slightly more longer term period, meaning to say the rest of this year, but the real impact, it takes time. It's not like you're going to see it next month or next week. It will, let's say if you ask me, most probably you'll see it in the second half or maybe in the latter part of this year, and the big impact might be next year. Because why? It's given it time to filter through the economy.
Meanwhile, commenting on the European Central Bank's launch of a bond-buying stimulus program, Shah said foreign funds will flow to Malaysia's financial and capital markets as long as the country's economic fundamentals reflect strength. The European Central Bank's measure will see 60 billion euros worth of bonds pumped into the ailing Eurozone economy. Shah said if Malaysia presents better growth prospect and earning profile, foreign funds will find the local market attractive. As for interest rates, Citigroup says it does not expect Bank Negara to raise its overnight policy rate this year. Jacqueline Peng, DHTV.